Just like that.
Just like that, we're live. How you doing, brother?
Good, man. Here we are using the power of the interwebs to come into your home.
That's it. To invade your personal space.
That's right.
With your consent as a point of fact.
Well, yeah, you can say that.
Yeah.
So I'm just now looking at the, you changed the name of today's show, man. Margin Debt, the fourth turning in you. And for the record, Will asked me not to look at the slides today. So
yes, there's a little twist in there. It's not really, it doesn't really have to do with the title at all. So maybe I just did a poor job on the titling this morning. But it has to do with investing and how much do people really understand what they're investing in. Ooh. And the it's sure you buy an S&P 500 fund, but how much does a person really understand about that? And that's actually something maybe I'll do in 2 weeks, because if I can lean on you to do show prep for next Monday, brother, I'm sorry to publicly put you on the spot, but my oldest is getting married on Saturday, and if I spend Saturday or Sunday doing show prep, that might put me out there in that doghouse.
No, we can't have that, buddy. I'll take the helm on that one. No
I
problem.
Appreciate that. We had his bachelor party yesterday and kicked it off with a bunch of range time with him and some family and friends, and we spent about 6 hours shooting stuff. So
that sounds like a good bachelor party.
It was awesome. So good group.
I checked the mail for my invite. It must have gotten lost. It's no big deal.
Well, we knew that you wouldn't come north of the Mason-Dixon line.
No,
so,
sir.
We just let that one go, so you wouldn't feel bad about missing it.
No, I can't go up there. It's funny. We had some house guests, and they're coming down from the north. And yesterday for breakfast, the dad, the only seat for this young lady was sitting in between my wife and her dad. And she's like, she didn't want to sit there. She didn't want to sit there. And I'm like, what's up with this? And finally, the dad's like, she read a book about Southern etiquette and culture, and she read that if you sit in the middle seat, then you're responsible for keeping the conversation going. And she didn't want to do it. And I'm like, okay, we do have a very definitive culture. I don't know that it's that, on the nose.
That's pretty funny. Well, at least she was trying to be respectful, and
I love it.
And learned about that sort of stuff. So
because we just like you cheeseheads up there, you guys have a culture too, man. I'd run a
foul. Oh, don't you know there? Hey, yeah. And see, like, you don't like the carpetbaggers coming down. We don't like the fibs coming up by us.
No, you don't need us up there.
Yeah. So no, the fib is from Illinois. That'd be a F in Illinois, and you can fill in the B. So yeah. So we like to give them grief.
Oh, good. They deserve
it. We love it when they come to the state in speed, so they chip in towards the state budget. So
who we got on the show here?
I see Alan Kelly's on from Occupied Virginia. Who else we got?
Mr. Michael Gentili, my good friend. Don Bothwell's up there in beautiful Northwest Montana. Hopefully I'll see you up there next year. Don, Miss Lisa, my lovely bride, is on drinking her obligatory coffee. And Scott is on. This is good morning, gentlemen, from Mid-Michigan, coin number 2489. And if you wonder what this coin business is all about, let me set it to you straight. Well, I know you know, because you've been a member for a long time. You're an OG. We have a self-preservation community. It's all the training programs you need to make you fitter, faster, and harder to kill. All you got to do is take a 14-day test drive. If you don't feel it's right for you, just click out of it. If you want to come and experience a high-risk environmental course we got going on November the 17th to the 21st, you can click on the links in today's show notes or go to shooting-performance.com and read about our high-risk environmental course. It's going to keep you very safer in these times. I mean, all you got to do is watch what's going on in any city in America and realize that the city council doesn't care. The chief of police doesn't care. She's probably a DEI hire, I'm afraid to tell you. Just thinking about you, Cincinnati, and how you're lecturing everybody without doing a damn thing about it. So if attending a week-long high-risk environment course sounds like the right thing for you, please check out the links in today's show notes. Jerry is on the show. Ed and Scarborough is on. Bruce is on. And with that, my dear friend, I think we can jump into the show.
Yeah, let's kick this off. So our start here, CNN's Fear Greed Index, which I've actually found to be a pretty good resource over the years, guys, is surprising as that is, and it has dropped considerably this week. And we're going to get into a little bit of the reason why. It was the jobs report on Friday, and really more than it was part of the jobs report. And for the record, this morning it's showing 55, so it's bounced back up a touch. But it was the revisions, which we've talked about for quite some time. And I went back and I tried to find the chart where we talked about it, and I could not find it for the life of me, brother. But these revisions are nothing new, and we're going to dig a little bit into how those revisions work, and why this is both fair and unfair to the Trump administration. So anyway, it was. I'm sorry.
Are you going to talk about the fact that didn't he fire the?
He did. We are going to talk about that.
Okay. Good.
And I'm probably going to upset a few people with my opinion on that one. You can see a week ago, it was at 73, and I think it peaked at like 84 or something like that. So really the market was way out over its skis anyway. It run way too far, way too fast since the Liberation Day, post-Liberation Day lows. It really got out over its skis. So it was due for a pullback, and I never used to be a big believer in seasonality. August and September aren't great, but I got to tell you, you go back and look at the data, and there's some truth to some of the seasonality stuff. And traditionally, August and September are not great months for the market. And I should really say the first half of September.
Why do you say that? I'm very shocked to hear you say that the seasonality thing. Are you talking about even commodities or just the market itself?
Just the markets.
Okay.
Commodities can and do run a little different. Oil typically goes up in the summer because of summer travel demand for gasoline, stuff like that. But for the stock market, there definitely is something to seasonality. The Santa Claus rally is typically what happens. December is almost always an up month, and at least the first half of January is often down because people wait till after the first of the year to sell anything they made profits on, so they can put off taxes for another year.
Mm-hmm.
So August is typically weak. And then the way we ran post-Liberation Day, once we bottomed out there, it all kind of set up for a nice pullback here. So, and we'll talk a little bit about how some other things are playing into this, because this pullback could go a little further. We'll see how it shakes out. I really don't see barring a black swan, which by definition we can't see coming, right? Barring something like that, I don't really see a impetus for a huge market drawdown like a GFC or something like that. As long as they keep printing money and shoving it out there into the economy, it's just going to muddle along. I think it's going to continue being volatile. As one commentator I pay attention to said, headline-driven markets suck. Because all it takes is somebody to come out and say something, and then the market goes up or down, and you just either have to endure the volatility or just jump off and do something else.
Yeah.
So
before we go any further, let's welcome some more folks on.
Please.
Will Rhodes is on, coin number 2269. John Shriver, coin number 1919. James is on from Massachusetts, coin number 1702. Derek is on. Got a lot of really good people, long-term listeners. Thank you guys for being on this morning.
Yes, thank you. Margin debt. So this is how you leverage one of the ways you can leverage yourself up in the stock market is you borrow money, and they call it margin. They don't just call it a loan. They had to come up with their own name, so they call it margin. So if you want to borrow $100,000, you put $20,000 down, and they'll hand you another $80,000, or they'll hand you $100,000, depending on how you want to look at it. And then you go out and buy stuff in the market with that. And if it goes up, that's really cool. Because now if you look at your cash on cash return, it's way better. So if I put 20,000 down, they give me 100,000, and that 20,000 can be another stock as well. It just has to be something of value. So I put 20,000 down. I go buy $100,000 worth of XYZ stock, and it goes up to $120,000. Well, I didn't make 20%. I made 100% because I only put 20,000 of my own money in there. Now you do have to pay some interest on that. But the point is, this is ways that people will lever themselves up. One of the ways. Okay, we're going to talk about some of the other stuff that happens out there. And this is usually a sign of optimism in the market, because why else would you borrow money to put it at risk, right?
Exactly.
Whether that's buying a house, buying an investment property, buying, fill in the blank. You think the value of that's going to go up if it's an investment. Unlike what I try to convince myself, cars are not investments. You don't know. You're supposed to agree with me there,
No,
Rich.
depreciating asset, my friend.
Old cars are fun, Rich.
They
Go
are
with it.
fun,
Go
and
with
they're
it,
going to
okay?
crush value at some point.
Okay. Yeah. All right. So the point here is, guys, is this is a lot of euphoria in the market, and this fed into the big run. What, 20% run ish, 25% run since the bottom of Liberation Day. This helped feed into it. And you see this is a longer term trend. And you can also see how the margin debt ran up prior to 2020, dropped down, and then ran back up again. This is just this is Wall Street, 101. They use margin. And this is how a lot of people put up outsized returns, is they lever it up. And I used to think, oh my gosh, how irresponsible. Well, if a person borrows money on a house, that's margin debt, right? Now you can say, yeah, it's an appreciating asset, but the vast majority of the time, so is the stock market. So define irresponsible. So but when it gets euphoric like this can also be a contrarian warning sign, because things get too far off sides, right? And now if the market starts going down, now all of a sudden they're getting called going, hey, you don't have 20% of room anymore. Let's say you put 20 down, they give you 100, and now it goes down to where it's worth 50. Well, you're going to get a margin call, and you got to come up with the money, or they're going to close your position and come repossess your Bentley. And if you can name the movie that came from, I'll be seriously impressed. It's from the 80s.
Oh, Wall Street?
Nope. It was a comedy.
Oh, okay. No.
But it had to do with Wall Street. Trading Places. Eddie Murphy.
Oh,
and,
yes.
Dan Aykroyd. Yes.
Love that movie.
Yeah, great movie. So then all of a sudden everybody's forced to sell if you start getting margin calls. And this is part of what happened during the GFC. So I'm not saying I see that coming, but if we see a significant market pullback that continues, Friday was a little ugly. But if that were to continue, then you could see some of this. Now, these people on Wall Street, for as much as we bash them, I bash them, they're not stupid people, right? They're gonna get out before it becomes a real problem. But as they get out, it will bring the market down. If that comes to pass. I'm not saying it will. At some point,
does it mean it's an opportunity to buy the dip or no?
Depends. In the longer term, for young people like our children, yes. But you may have to write out some volatility. For old guys like us that don't have a lot of time to recover, I'm going to be a little more on the cautious side. There's so much going on, and if they really do cut back government spending like Trump is proposing, but not really following through on at this point, it's
definitely not following through. Huh?
Definitely not following through. Yeah. Well, and in fairness to him, I ran this stat. I can't remember if I put it in a show or not, but I was talking with someone else. Right now, federal government spending is about 24% of the economy. I mean, let's really think about that for a second. A quarter of our economy is government spending, and they're borrowing a lot of that. I'm not sure what percent of the federal spending is borrowed, but it's a lot, right? So the Great Depression, the GDP went down by 30%. Well, if you cut government spending in half, you're nearly halfway to the Great Depression.
That's right.
Right? So this whole Doge thing, I mean, it's a great talking point, and it's come up with some stuff that is ludicrous, studying the sexual habits of monkeys in Paraguay or whatever is just a waste of American taxpayer dollars. However, the reality is that until the boomer generation dies off and we get rid of Social Security and Medicare problems, nothing's going to change. It's a math problem.
Yeah. What's interesting is, and I'm sure everybody's seen the headlines, how the cuts to USAID is literally killing the Democratic Party. They're running out of money quick, which is interesting, don't you think?
Oh, I'm sure it's just a coincidence, Rich. I
Oh,
think you need to go get a roll of tinfoil and make a hat. Because there's no way a political party would do something. No, nope.
You know what?
Not buying it.
No.
Yeah. So
let's welcome some folks on. Derek is on from North Carolina. Mark Hamilton on up there in beautiful Ontario, Canada. Ted Leonard, our good friend out there in Mississippi, wishing all economic success. Brian is on from North Texas. We got Peter from Rhode Island. Johnny King out there in the beautiful Bluegrass State. And Don says, older guys like us, you damn kids, get off my lawn.
That's it. And turn down that rock and roll music.
Oh, you can't have the rock and roll.
No, can't have the rock and roll music. All right, so let's talk about margin debt just a little bit. Something tells me you're going to start hearing a little more about this in the news. And it may not be, the world's falling apart. But my guess is you're going to hear something about it whenever something happens, whenever that is. Honestly, I'm not really seeing anything huge on the plate for the rest of this year, barring a Black Swan event. But if we could hear the dulcet tones of Rich Brown read this off to us.
I would love to. Margin debt surges 9.5% in June to record high. This is an article by Jennifer Nash. FINRA's latest data through June reveals record high margin debt at 100. Is this correct?
$1 trillion, yeah.
$1 trillion. Holy cow. This marks the second consecutive monthly increase with a 9.5% jump in May, the largest monthly increase since November 2020. The debt level is up 24.5% compared to 1 year ago. When adjusted for inflation, the debt level was up 9.1% month over month, reaching its highest level since December 2021 and is up 21.3% year over year. It would help if I knew if I was really confident about what I knew about margin debt, and I'm not.
Okay, so let's dig into a little bit. We hit the high points of it earlier. You're borrowing money, 20% down, borrowing money. And that 20% down can be, here, I'm going to put up my NVIDIA stock. I'm going to use that as my collateral. And that works great as long as the NVIDIA stock keeps going up. Okay. But if the NVIDIA stock goes down, that will also erode your margin there. You'll have to come up with some more money. So what are some other ways that we can use leverage in the market? Well, QQQ is the most, as far as I know, the most commonly traded ETF for the NASDAQ. Well, there's also TQQQ, which is a triple long on the NASDAQ. Okay, and that's an ETF you can go buy in your 401k if they allow you to do ETFs, or your IRA, or in just a taxable brokerage account. And that they use options to lever up the returns on the NASDAQ. There's also SQQQ, which is a triple short on the NASDAQ. So if the NASDAQ goes down 1%, SQQQ goes up 3%.
Wow.
Okay. SQQQ had a really nice day on Friday.
I bet.
All right. So this is a way that retail investors use leverage. That's me. Okay. So there's a couple ways I use this. One is after Liberation Day, I bought a bunch of TQQQ. Worked great. Up 50% in not too long.
Damn.
Okay. Now, the other way to use these is to short the market. There's also single shorts out there, but we're really talking about leverage here. So like right now, if you think the market's going down, you can buy a little bit of SQQQ. Now, the advantage of the triple is, let's say I just wanted to buy the Qs, as they're referred to. I wanted to buy the NASDAQ. But you know what? I also want to buy some stock in the American Warrior Society. Okay. But I don't have enough money to really do both the way I want to. Let's say I've got $10,000 to invest. Well, I could take and put $3,333 in TQQQ. Well, that would triple my return, right? And then I have money available to go do something else. The downside of these things, guys, is you don't get a true triple because there's things called option decay where time value of the options eats into them. We won't get into the real weeds on that, okay? But
Think of it
typically
as rules of
speaking,
the house at a casino, right?
yeah, kind of like that.
That's what
But
it is.
for a triple, usually you get 2.5x, something like that. But if you're looking to lever, hey, it's better than just going out and borrowing money. Because if you put, say, $5,000 into a triple long or triple short, the most you can still lose is that. Okay, versus going out and doing a real levered trade where you go borrow the money, you could lose it all. Okay,
Yeah.
so that's one advantage of it. IEF there on number 2 is bonds. That's 7 to 10. That's an ETF that does 7 to 10 year treasury bonds. Okay. Well, you can go by TYO, which is a triple long on the bonds. So if you want, so this is another way to do this. So say you're doing a 60-40 portfolio, 60% stocks, 40% bonds. Well, let's say you're going to put it all in 7 to 10 year bonds, which I would not recommend personally, but say you're going to do that.
Mm-hmm.
Well, instead of putting 40% in there, you could put what, 12, 13, you could put 13% in there in a triple, right? So now that the other money's freed up and you can put it in, it doesn't mean you have to go out and risk it, right? So this can be a tool over longer periods of time. Like we were saying, you don't get a true triple over a short period of time, a day, 2 days, 3 days, even a week. You get pretty close to a true triple. So it's a way to play it. Now, this next part is the part that's new, and then we'll get to Don's comment. In the past, it was always indexes, if you will, the NASDAQ, the 10-year treasury. Well, now it's to the point Wall Street's figured out, oh, hey, people like these things. So now it's down to individual stocks. NVDA, that's NVIDIA stock, is probably anybody who follows the market knows NVIDIA has been hot for quite some time. But you can also buy NVDU, which is and I think I typed this. I'm not sure if that's actually too long or a 1.5x long now that I look at it. But anyway, it's a levered play on NVIDIA stock. And the way they do that is they sell options on the stock that the ETF owns. So you will get double the play on NVIDIA. So now this can be good and this can be bad because double the play also means double down if it goes down. So it can turn against you real quick. And you best be able to hang on through that. Otherwise, you're going to double your losses. So this is not the Rich Brown risk-taking method, okay?
Not a chance.
What was Don's comment before we get to the example of this?
It's a great comment. It says $1 trillion in margin debt, a week-long hiccup in the market will crush a lot of people permanently. The downstream effect will color market enthusiasm by retail investors for quite some time.
Yeah.
I mean, the market really likes these. You know what? The market also likes synthetic CDOs. The market loved that until it didn't.
Hey, they worked great till they didn't.
Exactly. And Alan Kelly says, hey, didn't know calculus was part of our economic lesson. I'm glad you're doing the explanation.
Well, for the record, I can't do calculus, so we will not go there. Thankfully, my kids are a lot smarter than me because they do calculus. So
yeah, same here. Can't touch it. But yeah, I mean, I hear this stuff and I go, thank God I'm not in it because it's again, in my opinion, tulips. I'm like, no thanks, not interested.
I think tulips might be a little far, brother. Okay,
let me say this. What do you when you have this? What do you own? If I own a piece of Nike, I know I've got something, right? If I own a TQQQ, I mean, what do you own? Nothing. And like you said, it would the fact that the gains can evaporate on you if you don't play it right according to the casino. It's like, come on, bro.
Okay.
I mean, if you could get in and get out and make your money and good for you, but I mean, for your average person that think the return on investment, the risk versus reward, whatever you want to look at it, it's just not there. You got to play this close.
So let me ask you this. So And this foreshadows into later on in the show. This is the part I didn't want you to peek at, so I can tell you kept your word. Thank you.
I did.
So if I'm understanding what you're saying correctly, part of what you're saying is if you own Nike, you know what you have, right?
Yeah, I mean, if Nike makes a bad move, I sell it. You know, I mean,
okay.
Because
So
I only and I don't own Nike. Would never own Nike because I don't like the things that they're doing. I think they stir up racial hatred. That's my opinion. But I mean, I'm just saying, with a company, you know, with Apple or whatever, I'm like, okay, I can see what the company's doing. I can actually do a little bit of research and hopefully I'm guess right. But I mean, when you start doing those kind of things, it's like, what do you own? But yeah, go ahead. Sorry.
Okay. All right. Let's hold there for a second, and then we'll that dovetails perfectly into what I'm getting into later in the show. Okay.
Fair enough.
All right. So let's look at this example here for NVIDIA. Yeah. So this is basically year to date within a day or two here, and NVIDIA stocks up 20%, and I'm sorry, NVIDIA stocks up 26%, and NVDU is only up 20%. Well, that's a double long. Shouldn't it be up double? Well, the problem was you took a bigger drawdown, as you can see there on the magenta line around Liberation Day. You took a much bigger drawdown, so you got further to come back up. So,
can you explain Liberation Day for those that don't oblige?
Sure, that was when President Trump stood up there and talked about the tariffs on April 2nd, I believe. BC said he wasn't going to do it on April 1st because the media would call it April Fool's Day, which I thought was kind of funny that he just came out and said that. But stocks drew down. I think the S&P was down something like 18% in the weeks following that. So this is where we were talking about any of these leveraged things. In my opinion, don't hold them for a long period of time. Yeah, you're still up 20% year to date, which when the S&P is up 5 something after Friday, looks pretty darn good. But the volatility, this is the leveraged stuff is a trading vehicle. It is not an investment, in my opinion. And I will go on to say there's very few companies I will invest in long term because I'm old and cynical and watching them all play accounting games, and they're all crooks.
Yeah, 100%.
So, now, so I don't buy any of them.
Okay, cool. So NVIDIA is basically they make GPUs. It's a technology company, right? Started,
yes, correct.
Really kind of, and you know, my son is designing his own video game, so so that's kind of where they got into the market. However, now they're really, if I understand correctly, they're one of the leaders in AI, which is why the stock has been on a rocket ship for the last couple of years.
Pretty much, if you want to do AI, you have to buy NVIDIA chips.
Yeah. And
their margin is something like 80%. Their margins are incredible. They just sit there and print money.
Yeah.
It's pretty hard to go wrong with them right now. It really is. I mean, they sit there. Yeah, they took a big dip down here for a while, but that was after 3, 4, 5 years of just being up huge. So yeah, at some point a drawdown is going to happen.
But AI ain't going away, man. As
you and I were talking about in the green room prior to the show, like this, I asked ChatGPT to come up with this background for me, and then I was like, make this little tweak to it. And in like 4 minutes, I had this. I mean, graphic designers are going away.
Yeah.
Long term. And I will throw out there, hashtag not investment advice, not financial advice. It's worth exactly half what you're paying for it. The few companies I will stay in long term are retailers that I understand. And the two big ones for me are Walmart and Dollar Tree. Yeah, I understand their business model. And at some point here, when we take an economic dip, which is going to happen, those people shop down.
Especially rural America, man, where most Americans live, in the big flyover states, we can all understand Walmart and Dollar Tree. I mean,
can. Yep. And Walmart's the biggest grocer in the world right now. And people, and then we've already seen data that people are shopping down for groceries. They're going from Whole Foods to Walmart. as they're getting squeezed by prices and wage stagnation and things like that. I understand their business models, and so I'm willing to hold those two long term. But that's really about it.
Yeah,
as far as individual stocks go.
So NVIDIA's showing us back to the slide here. Is that 20% growth? Is that what you said?
That is NVIDIA is 26% there, the blue one, and the kind of magenta colored one is 20%. So this is where you think, well, hold on, that's a 2x long. Shouldn't it be, if NVIDIA is up 26%, shouldn't the 2x levered long be up 52%? Well, on a longer time period, it also means when you have a drawdown like we see there in April and May, the levered long is going to take a bigger drawdown. You can see where it was down almost 60%, while NVIDIA was down just over 30%. So it did its job. It moved twice as much. But that also means you got to come back from being down twice as much. So if Rich Brown had decided to roll the dice January 2nd, 2025, and bought NVDU, at one point you would have been down 60% on that. With NVIDIA, honestly, I probably would have just said, just hang on, give it a few months, right? But you'd still, as of a few days ago, been better off just having held in NVIDIA stock. Now, this is longer term, right? And this is where margin debt comes in as our example here, because if we go to the next slide.
Okay.
So not that, a year to date is a full investment cycle, but now let's take a look at if you would have bought it right around the bottom, just after Trump announced the tariffs, right? Back, you can see this started on basically April 1st. NVIDIA is up 70% since then.
Yeah.
But the 2X is up more than double that, 157%.
Can you explain your comment here? In my opinion,
Sure.
It's a trading vehicle, not an investment vehicle. What is the difference between those two terms for you?
So an investment vehicle would be a long-term hold. Whether you're going to buy an S&P 500 fund, it's something, or a Walmart stock, or whatever you choose, whether that be an ETF or individual stocks that you plan on holding for a long period of time. And by long in this case, I'm going to say a minimum 3 years.
So you don't think NVIDIA is a long-term hold?
I know the levered long is not a long-term hold.
Oh, the levered long. Okay.
Yeah. So the levered stuff is a trade. Now a trade can be a day or two. You can play earnings reports, which I don't advocate personally. I got burned on that a few too many times. Or in this case, after the market takes a big dip like this, a trade can be for months. From April to basically now is 4 months. That can be a trade. I mean, I'd call up 158% a pretty darn good trade.
Well, yeah, I'm looking at NVIDIA going back during COVID, was trading for, less than $5 a share.
Yep.
And now look at it, it's 173. That's insane returns, bro.
Yep, absolutely. And don't forget there was a split in there too.
Oh my God. Yeah.
Yeah. So, so this is why Wall Street does leverage.
Yeah.
Because they can turn around and get returns like this for their clients. So leverage is a tool. If you really believe in something, borrow money on it.
Yeah.
Go after it. Okay. Now that you got to have the right risk tolerance, and I think more importantly to that is you have to have the right position sizing.
Yeah.
Right. So you and I have very different risk tolerances, but let's just say Rich Brown, I'm making the math easy on myself here, has $1 million portfolio. I go, hey, Rich, I know you got low risk tolerance, but you know what? Liberation Day just happened. Why don't you throw like $2,000 in NVDU? Well, right now you'd have probably five? And the most you could be out is $2,000, right?
Yeah. And
the worst case scenario, you still own a derivative, if you will, of NVIDIA stock. The worst case scenario is you own NVIDIA.
What's interesting about NVIDIA, and check me if I'm wrong on this, but it's easy to see that with these countries, China and the U.S. primarily, really competing heavily. I mean, this is a new space race, AI, right? And these countries are creating the infrastructure for you for your company, right? I mean, NVIDIA isn't necessarily building all the infrastructure. They got huge investments. I mean, it's almost impossible to lose on this right now until the next NVIDIA comes along to compete heavily with them. But right now, I mean, it's like TSMC and some of the other, the lithography machines are made in Holland, and they make 99.9% of the chips out there. So,
yeah,
NVIDIA is kind of that right now. It's got it sewed up.
Yeah, they do. They absolutely do. And it's also a national security play.
100%.
You think any country would do anything to get an NVIDIA plant, NVIDIA infrastructure in their country? Yeah, absolutely.
And to your point, man, I'm so glad you said that, because one of the generals, when they were talking about the those GPUs they dropped in Iran to the bunker busters, I forget what they were called, doesn't matter. But he's like, we tied up 25% of the U.S. supercomputer just running scenarios before we dropped these bombs. And I mean, nobody picked up on it. He just kind of said it and rolled on. So, I mean, that's something, if you're watching your adversaries and suddenly their AI use and supercomputer use is going through the roof, it's like, oh, they're doing something. So, that's to your point. The strategic implication of AI is somewhat limitless. You want to plan out a war with Taiwan, what's the best scenario? You're going to probably have to use AI to get it right.
Absolutely. So then that becomes part of the race, right?
Yes.
Because everything's a competition.
Yes, it is.
So, and this is, so as investors, we'll look at different, places to deploy capital. Is it NVIDIA stock? Do we look at a couple of them? Generally speaking, that I like is NVIDIA, sorry, not NVIDIA, AI, period. The data centers use a lot of electricity. We were talking before the show. I read a blurb. I can't remember if it's yet this year or next year. It's forecasted that in Wyoming, more electricity will be used on AI data centers than for humans. It's a lot of electricity.
It's insane, man.
So, to the point that, I mean, you can't build solar fast enough. You can't whatever fast enough. But who's going to benefit from this? Utility companies, right? The construction companies. I think it's part of the reason Caterpillar's been going nuts lately, because you got to move a lot of dirt to build AI data centers, and you need dozers to do that, right? So there's downline plays in this as an investor. And one area that I like, believe it or not, is pipeline companies.
Oh yeah.
Because the company getting the natural gas out of the ground, and America is the Saudi Arabia of natural gas, they may or may not make money. The utility company that used the natural gas to make electricity may or may not make money. But that pipeline company, they're going to charge whatever they need to charge because they can. And by the way, a lot of those pipeline companies pay like a nice 9% dividend as well. So,
so where Seekland and I used to teach a lot of classes out, shooting classes out in a little place called Pryor, Oklahoma. I got to I'd come out there, and this giant data center, and I mean, I'd never seen one before. And if you haven't seen one, they're impressive works. I mean, just bigger than you can imagine. And the air conditioners that they use, and this is something else Will and I were talking about this morning, these giant air conditioners just running full tilt all the time, consuming a lot of water, as we talked about, et cetera. And Pryor, Oklahoma, I'm sure the land was cheap. It's just hot and hellish and flat, and there's nothing there. Where I'm going with this is to say that I remember being in Saudi Arabia before the Gulf War as a 20-year-old guy, and seeing the size of these giant oil places. And that was what my mind immediately went to. And it reminded me that, this is the new oil. Data is the new oil. Pipelines that carry this, whether it's a fiber optic pipeline or it's a pipeline to move oil and natural gas. And there was another small blurb in the news, but it shows me the fragility of this data stuff. I don't even think the American news media covered it, but that's why you have to go to Al Jazeera, Reuters, BBC. You got to look everywhere for the news. And it quietly was said that it was discovered in a little place called Svalbard. If you've never heard of it, up in the Arctic Circle, it's the most northern occupied island up near the magnetic north. Out in the middle of nowhere, they have the intersection of all these data pipelines running through the ground, and it's very strategically important. It's super top secret where this little point in space is under the ground, and yet somebody had gone out there, dug it up, and tried to sever it. And it's like, and they're like, if they would have finished the job, whoever these people were, and again, you can't just go to Svalbard. I mean, there's only one airport that even leads there. And they get iced in, and yet somebody had trudged out there hundreds of miles into nowhere to try to sever it. Like I said, 80% of communications around the world would have immediately stopped.
Wow.
Just showing the fragility of it, and that there is a race to this kind of stuff.
Yep. And the more complex things become, the more fragile they become, more brittle, maybe is the way to put it. The more brittle they become as well. So speaking of brittle, we don't want to have our investment account to be brittle. So to Tony's comment there, if you bring that up, any thoughts on spreading investments out over traditional stocks, crypto, physical gold, silver? Good morning to you as well, sir. Glad you joined us.
And for the record, there's like 4 or 5 Rhode Islanders on this morning, which is incredible.
We have a quorum from
state.
Rhode Island. Yeah,
love this.
So find somebody you trust, talk to them. I am a fan of having some crypto and some physical gold and silver. I do that personally. I don't know anything about your situation, Tony, how old you are, what your investment goals are. So it's kind of hard to speak to it in anything specific. Plus I'm not a financial advisor. So,
but he's speaking to diversification, right? Stocks,
diversification. A traditional 60-40 portfolio with some physical gold, silver. Many 401ks now, you can do a self-directed area where you can buy some of the gold and silver inside there. Well, it's not the physical you alluded to. You do get the price action, which, for a lot, it's hard to buy physical gold for a lot of people because you have to free up the cash, right? So that's one way that you can play it inside of a tax deferred account. Plus, then, if you sell it, if it makes a heck of a run, you make a bunch of money on it, you trim it back a little bit, you're not paying taxes on that, or trying to get rid of physical gold if you need to. For me personally, the physical gold and silver, that the intention of that, unless the world totally falls apart, is that'll end up with my children. So hopefully that answers your question, brother. If not, throw something else out there. We'll see what happens. So,
well, you took my words and here you're going to weaponize them. I love it.
I am. Yep. It's so really guard against this mindset. I only invest in a company if I understand the business model and how they make money.
Mm-hmm.
Be careful with that.
Mm-hmm.
So don't hang on this slide for me. How does Tesla make their money?
Couldn't tell you.
Okay. What would be the knee-jerk answer?
They make electric cars.
They make electric cars.
Yeah.
All right. And that's what I would have thought too. Okay. I've never owned Tesla as an investment. I've traded it here and there.
The reality is what? They're a battery company or something?
You wish.
Go
to the next slide, brother. Let's see where they make their money at. If you read that circled part for us.
No. Carbon credit sales accounted for a significant portion of Tesla's net income in some quarters, reaching almost 2/3. Now I feel like I'm going to puke.
Yep. So the way I understand it, and I could be wrong on this, guys, I read one thing, I don't know, months ago. I believe the way it works is every car manufacturer, based on their forecast for how many cars they're going to build, they get a certain amount of carbon credits from the U.S. government. Mm-hmm. And they can trade these credits back and forth. Well, Tesla builds electric vehicles, so they have no carbon footprint as a vehicle company. So therefore, they sell off their excess carbon credits to GM and Ford, who are making, F-150s and Sierras and all this stuff. And that's where they make their money at. It's not on cars.
Mm-mm. Now, the second part of this is the revenue from carbon credits has provided Tesla with a strategic financial advantage, enabling reinvestment in research and development, production expansion, and weathering economic downturns. That is until Congress decides to kill carbon credits at some point. Or I don't know. I'm just saying black swan kind of thing.
And you actually played exactly into my next point, brother, which is there's a risk in owning Tesla stock, and all it takes is a stroke of a pen from the government. Let's say you get President Donald Trump 3.0 on steroids, who goes, you know what, this carbon credit stuff is stupid, get rid of it. Yep. And Tesla stock's going to go down. I'll just throw a number. I'll say 50% in a week.
Sure.
Because they're going to lose 2/3 of their profit.
Right? Yeah, but again, it's like even Elon Musk has been saying this company's way overvalued,
Mm-hmm.
But again, it's like, and I think your investment advice is, and has always been, don't go all in on anything.
Absolutely.
But if you got 4%, 5% of Tesla, is it really going to hurt you if it takes that big of a dump? It's going to suck, but it's not going to put your lights out.
Exactly. And I have my own guardrails on the maximum amount of the portfolio I'll put into an individual stock, which is a low single-digit number. Mm-hmm. If I put anything at all into that. So I see Dr. Fuller's in the house. Good to see you.
Dr. Fuller's in this. Hey, I'll go ahead. This coming Friday at 7:30 Central Time, 8:30 Eastern Time, Dr. Fuller and I are going to do an EDC show, and I'm doing it based on a friend of mine, a YouTuber. He did one, and it was pretty good, about 30 something minutes long. And I'm like, but if he got a few things, and I talked about it, I think kind of wrong, then damn it, we're going to have to do one. And so
there you go.
I'm looking forward to that show with Dr. Fuller. Join us Friday morning for that.
Awesome. Look forward to that. So be very careful if you say, hey, I understand. I'll invest in XYZ because I understand their business model.
Yeah.
Now,
great point.
Earlier,
man.
I said
you don't understand shit. Pardon my French.
Earlier, I said I'll invest in Walmart and Dollar Tree because I understand their business model. Mm-hmm. That's after a fair amount of research, and let's face it, it's a much more straightforward business model than Tesla. Mm-hmm. Okay, but I'm not saying don't invest in Tesla. I'm not saying do invest in Tesla. What I'm saying is be careful with what you say based on surface level knowledge or minimal research.
I love that, man. I love that you made your point incredibly clear.
Thank you.
I certainly can't argue that there's way too many variables, and carbon credits wasn't even on my radar.
Yeah.
And Dr. Fuller says we will be discussing various EDC hair care products. Well, you need to be there.
Awesome. See, I got a little trouble area right here that, I only see a cow lick that likes to stick out right there. So I have to use extra product there. So if you could tell me how to have the stylus texture that so it lays back better, I'd
breathtaking.
be all over that. Yeah. The other area where it's like you talked about Apple earlier as well. Mm-hmm. A portion, it's not the majority like with Tesla and the carbon credits. Okay. But you'd think, well, they sell iPads, they sell computers. It's significant. Well, I shouldn't say significant. A not insignificant portion of their revenue comes from the App Store, especially early on after the iPhone came out, because they had a monopoly. Mm-hmm. And they really raked people over the coals who wanted to sell stuff in the App Store. So it all ties in together. But do be careful saying, I understand this.
Yeah.
Because there's a lot going on back there. And there's a risk there too, which is really what I'm getting to is if a regulation changes, Tesla's ability to make profits can change significantly. Right?
Yeah, well said.
So
Love it.
This is something to really be careful of, guys, as things are happening out there. Tesla's also had some bizarre stuff with, like, you'll notice there isn't a dealership network for Tesla. You don't see Brown Tesla of Tennessee, right? It's just Tesla. They got exemptions from car dealership laws because they're doing EVs, so they got preferential treatment. And that's why you'll only see like one, or like in Wisconsin, I think there's maybe a handful of Tesla dealerships, if that, if even that many. But they received exemptions from all these laws, which helped them make a lot of money, because the dealerships, they take up a chunk of the profits, right? Well, Tesla doesn't have to share that because they own the dealerships.
Wow.
So they got a lot of preferential treatment in there because they were checking the box for the EVs. So,
well, and this speaks to Alan Kelly's comment too, which absolutely, this is what I was thinking. Alan says it's funny, Tesla has no carbon footprint as far as electric vehicles, but it takes a hell of a lot of electricity consumption to build their vehicles and batteries. The electricity is generated by mostly fossil fuels. Yeah, and think about the carbon footprint of mining lithium at scale and all the other, precious metals that go into those things. That's ridiculous.
Yep, it is. So, and if you read Tony's comment up there, Smith I'm not familiar with that. Never heard of that before, brother. Fill us in on that.
Yeah,
because I'm not familiar with that.
No, same here, brother.
All right, let's go on to the next slide here and keep moving.
Okay.
Investors are using borrowed money to buy stocks at a pace last seen during market bubbles. That sounds bad.
No, it sounds real bad.
So this is just continuing on with this. So it's not just some wonky place that did that. That was CNBC where that one came in at. This one is the fourth turning part of the show. We've covered the margin. Now let's talk a little fourth turning. The rise of Luigiism. Okay. And that is, was it Luigi Maggione? Was that his name in New York City that killed the CEO of United Healthcare? This is a portion of the fourth turning, guys. And the fourth turning, to remind everyone, is a lot of social strife. It is the bad part of the old saying, hard men create good times create soft men create hard times create hard men. We're in the hard times part of that. Okay. And this is going to go on. If you read the fourth turning, if you read The Storm Before the Calm, books like that, this is going to go on for about 4 or 5 years till about 2030 ish. That's a very ish type number. Okay. So the rise of Luigiism is, in my opinion, really sick people celebrating the death of others based on, in this case, capitalism, I'll say. Now, United Healthcare, there were complaints out there about how they treated customers and so on and so forth. There's a big difference between that and killing somebody, right? So let's dig into this article a little bit, because they do a decent job of hiding this. So this is now switching over to this recent one in New York City, who, the guy walked in there. He was from Vegas.
Drove all the way across country just to shoot some people in NFL headquarters from Black Rock.
Yep. And admittedly, I have not followed this one real close. It says here there's some evidence the killer was targeting the National Football League, which shares an office with Blackstone. But here's what I think is for us is the important observation out of this whole situation is it was clear within a few hours his motive was irrelevant to the hordes now celebrating LePatner's execution. And this is Wesley LePatner. She works for Blackstone. Okay. And across these different social media platforms, many people, many anonymous, which if you're not willing to put your name on it, give me a break. Not really going to listen to much what those people have to say. They seized on this executive's death as a symbolic retribution against, I'm paraphrasing here, against capitalism. Her position in the investment firm became licensed for cruelty, mocked her success, dismissed philanthropy, and even some anti-Semitism is in there, as I understand it. So these people are, I'm going to make some assumptions here, but they're frustrated by the system, right? And some of this, a very, very little bit of this can be understood, right? you and I have talked about how it is tough nowadays for young people to get started. Tougher than it was for us. Okay. Yeah, the numbers on their W-2 are a lot higher, but go look at home prices, right? Go look at food prices. There's a frustration out there. Now, I would say to those same people, they were the same ones celebrating stimmy checks while old guys like us were going, this isn't going to work out well.
Yeah. Turn the faucet off.
Exactly.
But I mean, I don't know where you live, but of course, Tennessee's exploding with all these blue staters rushing in to capitalize on some, favorable economic, incentives here in Tennessee, as well as, low cost of living and everything, just driving the market through the roof. But I'm seeing an explosion, Will. I wish you could see it. It's unbelievable, specifically in places like Cookville and Knoxville, that they just every available inch of real estate, they're throwing apartments up. They're not building new houses, Will. Putting apartments up. Well, and I'm like, is that something that and I'm asking a question sincerely, when we see interest rates start going back down again, we'll see new housing developments and less apartments? Is it interest rates that's making apartments go through the roof, or what?
I would say yes. And I live in relatively rural Wisconsin. If you want to build a starter home here, you're looking at minimum 400,000.
Jesus, a starter home.
Yeah, that's by the time you buy the land. It's check all the boxes, right? And I was just talking with a friend yesterday who's in the mortgage business, and he was like, "Yeah, I mean, this, he's starting to see more of people refinancing houses to pay off credit cards," and I'm like, "Hold on a second." And he spoke to one person who was locked in at 3%, 2.8, something like that, and had lots of home equity, but also had tens of thousands of dollars of credit card debt.
Yeah,
that was becoming unmanageable. So they're refining the house up at 7% to pay off those credit cards. It's like
we haven't talked about we haven't talked about credit card debt for a while, but I mean, it's staggering. Or it was the last time we reported on it.
Yeah, I'll guarantee it has not gone down.
No, sir.
So, but to your point, a couple of thoughts. If rates go down, values are going to go up. Now, as we talked about in the past, everybody wants low rates, and I'm not directing this to you. Everybody wants low rates, but nobody wants what it takes to get there. Right. COVID, GFC, right? It's going to be bad to get back to zero rates. I mean, look, the employment market starting a downward cycle. That's going to get rates to go down, but nobody wants to lose their job, right? So, but longer term, the real problem I see there is, how do you get in the game if you're renting and rents are sky high?
Yeah.
And by saying get in the game, how do you get ownership so you have an appreciating asset? I mean, rent's 100% interest. So how do these young people get in the game and get their foot in the door when it's these houses are so expensive? Like to Mark's comment there,
$850,000 for a starter home, 45 minutes outside of Toronto. At 1995, 96, Lisa and I bought our first starter home for 69,000 and some change, whatever, just shy of 70. Well, and we had a 7.5 interest, which was not bad back then.
Right.
But now you get, like you said, a starter home is 400,000 and 7.5.
Yeah. How do you? Kids in their 20s can't make enough money to support that.
Hell no. With wages,
and I remember the first house that Greta and I bought was a duplex, and it was 80,000 ish, somewhere around there. And by the time the renters paid the downstairs, we were paying like half of what a 1-bedroom apartment was going for, and we had a 3-bedroom upper. And we enjoyed the tax benefits of it. We were able to get in the game with that property.
And when was that? 90s?
That was 98.
98.
Yeah.
Smart move.
So it goes from there. What's Dr. Fuller say up there? Because I think this is
Back
exactly
Luigi.
correct. Yeah.
Yeah, he says we can understand and even sympathize with extreme positions. It's when rhetoric turns to violence that the position loses me. Debate is fine. Combat is to be avoided. Yeah. Now, of
Mm-hmm.
course, not everybody thinks like us, and I would encourage anybody to read "The True Believer" by Eric Hoffer. Uh, my friend Michael Gentili, if he's still on, he gave me a copy 25 years ago,
Mm-hmm.
and man, it really blew my hair back. I can't recommend it enough. It's on the nature of mass movements, and it talks about the misfit, how he can be used for the cause to commit violent acts and stuff like that. I mean, it spells out Islamism today and a whole lot of other things, the social psychology behind it. So definitely check that book out and you'll understand, because this isn't going away. Like you said, this is part of the fourth turning, folks.
Absolutely. What's Alan Kelly have to say there?
I had a lady in front of me while I was waiting in line at a self checkout. This lady went through 4 debit/credit cards before one was accepted. My goodness,
Yeah.
that's crazy.
Yep.
Yeah, and see, this is another thing. Dr. Fuller says the definition of starter home has radically shifted in a generation as well. Older generations were willing to live smaller. Yeah, our house was, I think, 1,100 square feet for
And
70K.
your point is well taken, Dr. Fuller. But as my oldest is getting married here shortly, they bought their first home, and so my first single family home would have been in '99, I believe it was. 1,100 square feet, 3 bed, 1 bath, ranch on a foundation. Okay, 72,000. That same home, the equivalent home right now, not that particular one, because they've added on a pole barn and a garage and things like that. So it's changed the value of that one. But an equivalent one right now is minimum 125. And that one that I bought was built in 70 something. Now you got to go back to where they were built in literally 1940, 1950 around here to get that price.
It's funny. I was just looking up the street that we lived on because they were all kind of condos, and so we bought for 69, and now they're selling for 280. So that's a 400% increase.
Yeah.
How'd you like to get a 400% return on your investment?
Oh yeah, no doubt, with tax advantages.
Yes, sir.
So Dr. Fuller's point is well taken, and he's correct. What some people consider a starter home now, we would have considered the forever house, right?
Yes, sir.
And people aren't willing. And it's not just that. I drove junk for a long time.
Same here.
And
I drove a '94 Honda Accord and it was total, and it was a salvage title, because I'm like, and people used to laugh at me, sir, you can't, you got the most janky car in the whole command. And, I was a chief warrant officer driving this, like, it has no air conditioning, has no radio. I'm like, yeah, man, because I'm saving so that I can sit on the beach and do nothing.
Yeah. Yep. So, it's vehicles. It's, when you and I were coming up, there really wasn't a laptop to go buy.
Mm-mm.
Right now, it's a need. Ditto for an iPad. Ditto for a phone. I mean, a phone's what, $1,200, $1,300 nowadays? I don't even know.
Okay. Let's talk about this, because this cuts both ways. This is an interesting segue. When I would go overseas, for Lisa and I to have a 15-minute conversation on the phone would cost $100 back when I made, as a young Marine, probably minimum wage. I mean, so that 15-minute phone call, once or twice a month was like a huge pull on our finances. In the Marine Corps, the military doesn't give you any kind of break on that. Well, now you can pop a Zoom call like you and I are doing right now. It costs absolutely zero. And we forget about stuff like that. So there are incredible trade-offs from what we used to have to do. When Lisa and I call each other as kids in high school, when our parents moved us away from, I was making $3.35 an hour and having to pay my parents for my long distance charges to call my girlfriend a couple hours down the road. You don't have that nowadays.
Yep. Absolutely.
So,
and you also wait until after 7 p.m. That's something these kids don't understand nowadays either.
That's right.
So,
but I mean, so there's trade-offs.
And you change long distance providers every few months to get the perks.
That's right. If you're smart, you
The
do.
game, yeah. Well, you game the system out. So, and to your question there, Dr. Fuller, yes, it's a need. I'm there for you, little one. Don't you worry.
Mm-hmm.
We got you. Okay. Um, what's this say there, brother?
Invoking Luigi Maggioni, the Ivy League educated radical who allegedly assassinated United Healthcare CEO Brian Thomas last December, Luigiism is the idea that violence is a legitimate response to the perceived injustices of capitalism. If the victim represents wealth, whiteness, pro Israeli Judaism, or institutional power, the killing can be framed as justified, even glamorized. And women are flocking to this Luigi guy, even though he's going to die in prison someday. I hope he does if he's guilty. It looks like he is.
Yeah.
Is there a dark side to capitalism? I'm going to say, yeah, there is. I mean,
Oh, absolutely.
capitalism is not perfect. I mean, it definitely
No.
has its detractors, but overall, man, it's the
Well,
best system out there, brother.
if we look at capitalism, socialism, communism, insert your ism, the problem isn't the ism. The problem is the humans,
Amen.
right? So, is there a dark side of capitalism? As a very dedicated capitalist, yes, there is, and I've seen it. We've all seen people cheat one another over money and lie and everything, right? The difference is, in the end, you still have a choice with capitalism.
Yes.
I
You can
don't
vote with your
have to go
dollars, right?
absolutely. And the problem I think in this is anybody who sees violence as the answer is part of the problem.
Yep.
Period. Dot. End. Okay. Yes, the wheels of the system turn slowly towards justice when things are done wrong to you, but violence isn't really going to solve it.
Mm-hmm.
In a very sick mind, violence solves that.
Mm-hmm.
But what really got solved when the CEO of United Healthcare was murdered? What got solved? Nothing.
I'm
Right?
sure the security industry around these CEOs got a
Well,
boost.
yeah, I'm sure it did. So I like Don's point there. What's he have to say?
Cronyism has corrupted capitalism in our republic.
Mm-hmm.
Yep.
Absolutely.
Tony says the only dark side to capitalism is when the government gets involved. I would have.
Yeah.
I know a lot of people would agree with that, but I'm going to tell you, we need somebody to keep,
Yeah.
a plastic manufacturing plant from dumping its, sludge into the river and stuff like that. I mean,
Yeah.
I'm all
I
that
mean,
deregulation, but some regulation has to be in place because capitalism say jack the profits up. We don't have to dispose of it. We just dump it in the water.
yep. Yeah. And I'll, I famously, I remember I forget the name of the river now in Cleveland. The river caught on fire in the 70s.
Mm-hmm.
So I think there do need to be guardrails out there because otherwise some people will push it too far.
Yeah. And as a genealogist here, and, my family's been in Southern Appalachian region for hundreds of years. And, a lot of them were miners, and, a lot of my ancestors working in the mine didn't live past 40 something,
Mm-hmm.
why unsafe mining practices to bring every ounce of profit out. So I think that's what I'm getting at. Mining now is a legitimate career because of the safety that's put in place, not necessarily by the market making it, does the market really give a shit if some miners had to die to get this copper? Not a bit, didn't care.
Nope.
So we need some government regulation to come in so that it can be a career, and we could get it out cheap. But that's my opinion. I could be wrong.
Yeah, I think you're right. So, so this article goes on to say Luigiism isn't confined to the digital cesspools of TikTok, Tumblr, or Twitch. I'm not even sure what Twitch is, to be honest. Here's the dangerous part. Its logic is now creeping into mainstream institution. Recall the words of Senator Elizabeth Warren following Thompson's assassination. Violence is never the answer, she said, but people can only be pushed so far. Unquote. The equivocation is a tell. When violence is seen as the inevitable outburst of a legitimate grievance, condemnation becomes conditional. And that's a real problem. Well, yeah, that was wrong, but you can only push people so far.
That's the same justification we saw coming out of that councilwoman in Cincinnati saying they deserve that beat down. Like, what are you talking about?
Yeah.
A woman trying to break up a fight got punched in the face and knocked unconscious, could have been killed. I mean, when your head hits the pavement like that, my God, man, those are often fatal. And yet, and she's standing by those remarks. And if she can be removed, she needs to be, because she will not step down. She's not backing down. But that's that mentality.
It is. And that's, to me, that's very dangerous, because that's I don't know. I don't want to say a recommendation for that, but it certainly brushes up against that line. Yeah,
Amen.
but. Yeah, but. No, there's no yeah, but. If you kill someone in something other than self-defense, it's wrong. So, yeah.
This goes on to say, Will, the most prominent political figure to flirt with Luigiism is arguably Zoran, whatever his name is, the man most likely to be New York City's next mayor. One of Mamendi's top aides lauded the United Healthcare CEO's killer, and Mamendi himself has called the NYPD, quote, wicked and corrupt, end quote, argued that, quote, queer liberation means defund the police, end quote, and pledged to disband the department's strategic response group, the very unit that responded to Monday's shooting. Banana pants.
Yeah. It's and the scary part for this Mamdani in New York City is the young people are voting for him in droves, which I think is also part of the whole fourth turning. They're frustrated with the system that they cannot benefit from. So they found somebody who's like, hey, we're going to take from these people and give it to you. So I see people like him and their policies as it's a symptom. It's not the problem. Right. So it's going to be hard to fight against, because no matter what the math is for these things, this is how these people feel.
Yeah.
And feelings, you can't have a logical argument around feelings.
Nope.
Right. And that's why the 9 mil versus 45 debate goes on and on and on, even though there's lots of data, right? It just keeps going. These people get their emotions wrapped around, God's caliber, right? So but we see microcosms of that everywhere. So yeah, this is gonna be a tough one. And there's a lot of jealousy in there from people who aren't able to benefit from the system the way it is at the moment, right? A lot of jealousy. There's a lot of greed on the other side of that, right? And there's people out there, business people in some cases, many cases, who use the regulatory power of the government to ensure their own position. So,
which speaks to what Tony's saying, right? And yet the EPA, OSHA, et cetera, has become so corrupt. A small business like mine is overregulated. It can't get off the ground. I'm not sure what business you're speaking to, but I will tell you, from the construction industry, getting into that 11, 12 years ago, I thought, man, let's dig into this OSHA thing before I go much further. And so I took all the OSHA 30 and all the classes. And what I came away with was like, really 99.9% of it is just suggestions. Like, this is a good way to do business. I'm not trying to. I was shocked that we don't get more heavily. We've never had a fine. I mean, I don't disagree with any of the recommendations. I mean, we tend to follow them, some we don't. I haven't seen it. I'm sure it's out there, but I mean, a lot of it's just common sense. I mean, you don't want to have your workers working up there without safety equipment on. I don't want to get one of my guys hurt or killed. So yeah, I'm going to invest in the best fall protection equipment I can get for my guys on scaffolding every day. I want them to go home to their families. When my dad came up in this industry, he's like, this is a fall protection harness. I'm not wearing one. You probably don't want to wear one of these damn things either. And literally, that was his speech. And he'll tell you, yeah, I'm not wearing that crap. I'm like, well, that's not today, Yeah.
Yep.
Anyway, I got digress.
So, I like Dr. Fuller's comment there. Conditional forgiveness for violence easily morphs into permission.
Yeah, Ted says people voicing supporting the violence cannot take a right hook out cold and hit head on pavement and avoid brain bleeding. And instigators get too much attention.
Yep, for sure.
It's again part of the fourth turning, folks.
It is. So something to keep an eye on. I bring it up within the context for our self-preservation society here. This is going to be a long, slow grind, just like it was 60s into the 70s. That wasn't even a true fourth turning at the time. The last fourth turning we went through as a country was the Great Depression and the World War II. Mm-hmm. So, and of course, things are vastly different now. Social media, communication ability, all that sort of stuff. So, be on the lookout. It's going to be a long, slow grind. So, to your comment earlier asking if we're going to talk about this, Trump fires the commissioner of labor statistics after weaker than expected job figures slammed markets. All right. Full disclosure, I voted for Trump 3 times. He is flat wrong on this. There's just no way to spin this. I mean, this is getting dangerously close to the Ministry of Approved Government numbers. You put out numbers I don't like, you're fired. Come on. He's playing into Team Blue's hands with doing stuff like this.
Here's the way I heard it. And again, I'm sure it's propaganda, and I haven't dug into this at all, so I'm an idiot. But again, we saw under the last administration, the Biden administration, where we put out phony numbers because BLS is part of the executive branch, as I understand it.
Yes.
And nobody's held accountable when they have to, go back later and go, we were wrong. Oh, we were wrong. Oh, we were wrong. And again, it's like, okay, well, I'm not going to tolerate that anymore. If you're wrong, you can't get your numbers together, then there's going to be consequences for that. I mean, in any job I've ever worked in, if I misreport numbers again and again and again and again, I'm going to pay for it, in my pocketbook. So I don't know if it's just accountability to you can't get your shit together or what.
I think there is some legitimacy in that, and I agree with it to an extent. Okay. Here's the challenge. If you go to the next slide, we're going to dig into a little bit of this. And full disclosure, I tried to find the chart where in a show I was very critical of the BLS for these constant revisions, always in one direction. And I'm still critical of that. What I'm critical of in this set of slides here is the firing of this person is really a knee-jerk reaction, because we could make the argument that, whoever's in charge needs to take responsibility for this. And I agree with that. But it's also a bit of the way the system is set up as far as revisions go. The fact that there are revisions. Now, the fact that revisions are always going in one direction, that's a problem, because that means they are screwing up. And I agree with that part of it. Okay. But we're going to knock this slide out real quick, and then we're getting into the meat of where I'm going with that. So, we were expecting about 120,000-ish new jobs, and they came out and said it was just 73,000 jobs created in July. In addition, the Bureau revised the 2 previous months down sharply, cutting a combined 258,000 from prior cuts, putting a 3-month growth rate at a paltry 35,000. It's the biggest 2-month downward revision since April 2020. So the revisions, if you can go to the next slide there, brother, instead of me just trying to. Okay, so I brought old Chat GPT into this.
Recognize the font.
Yes. So basically there's 3, there's a what's often called a flash number for jobs. That comes out the first Friday of the month to talk about the previous month. Okay. So in all fairness, the first Friday in August was August 1st. How do you get accurate numbers for July on August 1st? And then to that point, how does BLS get this data? They send out snail mail and they make phone calls.
Yeah, my business was part of it forever until I
Right.
finally said I've had enough. But yeah,
Exactly. And
I used
exactly
to get
that
the
point.
damn phone call every, if it
Yep.
started
And the
every month
reason
or whenever it was.
you kept getting the phone calls because you actually talked to them. Right.
Yeah,
So,
because I do want
and
accurate reporting, and guess what? I gave them accurate data. If they went and cooked the books on the numbers we gave them, I don't know what to tell you. You know what I mean?
well, so here's the challenge with the flash number
Mm-hmm.
is like, especially in this one, and this is a not common example, but August 1st, they didn't to report that number August 1st, they weren't still compiling data at 11:59 p.m. on July 31st,
Mm-hmm.
right? So they're probably working off 3 weeks worth of data,
Mm-hmm.
and then they're extrapolating that. Now, if a business, I will tell you as a former business owner, if my business was struggling, about the lowest thing on my priority list is going to be returning BLS's phone call.
Sure. Yeah.
Okay. So, and then you also have to go off the assumption that somebody's going to tell the truth.
Mm-hmm.
Okay. So there's the flash number. And now we're going to go back in time. So we're going to talk about the August report here. Okay. So August 1st, we get the flash number for July.
Mm-hmm.
We also get the first revision for June. And we get the second revision for May as more data has come in for each month. Okay. Now, that said, if we go to number 2 on this, the scale of average revisions. I don't know how far back ChatGPT went on this.
Right.
The average revision from first to second is around 7,000 jobs. And from second to third, about 1,000. I don't know how far back they went on that, but I can't remember the last time the revisions were that small.
Hell no. No.
Okay.
Because
They're
that's a
huge.
rounding error. That's not a problem.
Exactly.
Mm-hmm.
So there's where I do have an issue with it. They should be, by now, with all the data out there and all the historical data to look at and all the technology, they should be able to do better in this.
Mm-hmm.
Okay. So number 3 here,
Can we talk about this? Because we probably should have
Yeah.
said this, but what's the downside of this?
So
it's inaccurate. Well, it's causing market turmoil.
Well, it's causing market turmoil, but it's even, I think, bigger picture to that. The Federal Reserve uses this data to help drive what they're going to do with interest rates.
Yeah.
It also drives the bond market to react to this, to your market comment. It's not just the stock market. The bond market reacts to these numbers too. So these numbers have huge implications in the short and longer term for markets.
Yes.
And
Which
so
is
this
why,
is
to me,
where
accountability is paramount. But this speaks to Dr. Fuller's point. We need accurate. Well, let me go back to his other one. Fired for errors, sure. Fired for not publishing approved numbers, not so much. And I think everybody on here would agree with that.
I couldn't agree more. Where I think Trump really screwed up here was the knee-jerk reaction to it, and the
But how
way
do we
he
know
went
this
about
person
it.
hasn't been counseled on it month after month? You know what I mean? We don't
You're
know.
right. We don't. I don't. They don't include me in those email chains. I think it's kind of rude, but they don't. But to that point, though, there's a way, right? If you're going to fire someone publicly like that, if it was me, I'd go out there and be like, okay, this person's been counseled for however many months in a row to get better numbers, not get approved numbers, get better, more accurate numbers. When I say better, I should say more accurate numbers. And that has not happened.
No, the messaging and optics are horrible.
Yes.
My
that's
knee
where
jerk,
I think,
my knee jerk on seeing this was, oh my God, what are we doing here? We just took up this giant turn toward authoritarianism, and somebody explained, like, wait a minute, calm down.
Yep.
This is why. And I'm like, oh, well, yeah, I've heard Will talk about this for 4 years under Biden. The revisions always went one way.
Yep.
So at some point, it's like, man.
But now here's what I found curious. So this is my bride and I were actually having a discussion about this. When Biden was president, so take Fox and CNN, okay? See if you can guess which way this would go. Under Biden, when all these negative revisions were happening, did CNN talk about it?
I don't think so.
You think Fox talked about it?
Oh, yeah.
Now, what do you think? You think Fox is going to talk about this negative revision much?
Nope.
You think CNN's talking about it?
Yep.
Yep. And to try and keep the show time down, I didn't include, there's an interesting article from the Atlantic. Suddenly we're discovering this stuff. And it was just, lambasting,
Yeah.
Trump for this stuff. And it's like, well, hold on, where were you for the last 4 years? Seriously?
Thank you.
But it plays to the base, right?
Yeah.
It sells advertisements, right?
Yeah.
So
and Dr. Fuller says we need accurate numbers, good or bad, or we run the risk of being China. Do you agree with that, Will?
Absolutely. I can open a phone book if you're old enough to remember one of those and get numbers. They may not mean anything, but there's a lot of numbers, right?
Mm-hmm.
So, what's Ted say there?
She died under Biden overinflate the government hiring numbers. Get told about in
Yeah, try that one again. I think autocorrect might have gotten you there, Ted.
Yes, it's my typos. Dr. Fuller says the president seems weak on the how part of his messaging and actions. A bit of explaining in context would help him much. Amen to that.
Absolutely true. So, this was a huge revision, even in comparison to the revisions that you and I talked about in the previous show, which I wish I could have found that chart, because this is not new. But even so, there's the BLS report. There's also an ADP report put out by the payroll company, right? And they obviously don't take it down to individual companies. They put out the ADP payroll report. And you would think, and they're pulling that off data for payrolls they're running for all these companies, right? They even have a hard time getting accurate data. So this is it's an ongoing problem, and we can talk about government screws up everything they touch, and I'm with you in spirit on all that, okay? But this is part of the challenge of coming up with jobs data when you're counting on people responding to surveys.
Yep.
Now, overall, ADP is more accurate because they can look at real-time data because they're actually running the payroll for these companies, like we say. However, they even have a hard time getting it right. And they should have real-time, almost instant data, right?
Yes.
So my point here isn't, I still absolutely believe the whole BLS system is jacked and politicized, and everything I said in previous shows, I stand by. Where I think the mistake was made here was Trump's, looks like a knee-jerk reaction, firing her because she spit out bad numbers. That's where but that also plays into the fourth turning thing and loss of trust, as we talked about before in previous shows. The fourth turning, loss of trust in government services, government processes, whatever you want to call that, right?
Mm-hmm.
That's all part of the fourth turning as well, and that's really more the angle I'm looking at it from.
Yeah, absolutely. Ted says September 2024, Will talked about the massive government hiring numbers that were never revised. And I want to get back to Tony's point here. It says the overregulation of government denies capitalism by small entrepreneurs. Big industry lobbyists pay big dollars to Congress critters to not allow startups that could become competition. Boy, you are 100% right on that. And in that regard, I absolutely agree with you.
Couldn't agree more. And I can, if for anyone maybe want an example of that. So before my bride retired, we owned a bridal boutique here in Wisconsin and had about 10,000 square feet. And the way large businesses use government regulation, and also where you see even very notable people like Warren Buffett using this, is they'll be like, for the good of the consumer, we don't want really small places because they can go out of business, they can be volatile, they can blah. So I think somebody should have to open a store in this industry. They should have to have at least, 9,999 square feet.
Mm-hmm.
Well, now you just stopped everybody who started like we did when we started at 1,500 square feet. Mm-hmm. So this is how big businesses, relatively speaking, in the case of ours, would use that government regulation and appeal to the masses by saying, we're looking out for you, right? Tech companies are really good at this. It's how they crush startups and then buy them for pennies on the dollar. And the big businesses, other regulations, whether that be the owner, when there are onerous safety regulations or compliance regulations, you have to report this and this and this. Well, a big company can absorb those costs. And it's a rounding error on their balance sheet. So that's to Tony's point. I agree, and that's kind of the inside baseball of how they do it.
Oh yeah, man. I mean, look back at Juan Tripp and Owen Brewster. Juan Tripp of Pan Am had Senator Brewster in his pocket and was trying to crush anybody that wanted to was it international travel? Yeah, except for Pan Am. Like, they could do it better. You just need to let Juan Tripp and the boys over there at Pan Am handle it, and trying to keep all the other airlines out of that market. And so that speaks to his point. And you've given an example even in your industry. I mean, it's disgusting.
Yeah. Yep. And this is all also over time. This stifles innovation, right? So, a picture is worth 1,000 words, and this one does put these revisions into context. So if we look back in 24 and early 25, when we were talking about the revisions, you can see how these revisions have just gotten bigger and bigger and bigger, really in 2025, right?
Yeah.
So there's definitely a problem within BLS. I mean, there's very, very few months in here where the revisions are small. And there's times where it's like, okay, I can see it, late 2021. Things are growing like crazy, right? Yeah. And also around 2020, when things are very dynamic, let's face it, it's the government. They're not gonna react well. That behemoth is not gonna react well to a very dynamic environment.
Here's my point. We want, I think all of us want government accountability. And then you get government accountability and somebody says, well, no, he's politicizing this. I'm like, is he? I don't know what his intent is, but I can see the numbers that this person is not providing accurate data that the Fed can use and that the markets can use. It's like, okay, well, what do we just let her keep screwing this up, or do we do something about
it? I agree with you. A lot of it here, for my take on this with Trump, is the optics of it.
Sure.
Right, and that's where Trump's been doing a lot better job this time than Trump 1.0 with optics. But this one, I think he got out over his skis on this one, the way he did it.
The way,
yeah. I think if you would have put it in relationship, like I said, ADP has a hard time getting the numbers right, but they're a lot more accurate, and a lot smaller revisions. So, yes, to your point, yeah, BLS is not doing a good job. However, I think a little context when he did this, would have gone a long ways towards building credibility.
Sure.
And not playing into the media machine on it.
But like you said, I mean, CNN is going to report it the way they report it. And that speaks to something else. Let's go back to this comment, because Tony did answer the mail on what was he talking about. And it was actually something I was unaware of. Let me see if I can find your comment again, Tony. The Smith-Mundt Modernization Act of 2012 allows media to report propaganda. In other words, they can legally lie to you over the airwaves. Fact checking is lying to you. So again, they're going to spin it the way they want to spin it.
Absolutely. Yep. And then if they screw it up, they'll go, well, that was opinion.
Exactly.
Yeah. So, what you want to read this one off for us, brother?
I'd love to. Your next move matters far more than your last mistake. I love it, but it's a really good idea to learn from that mistake. Well said.
Yep. So don't dwell on the past too much. So, yeah. So it's just, this is all part of the fourth turning. There's gonna be a lot of volatility, whether that be society, markets, coming over the next 4 or 5 years. It's going to be a grind. I'm seeing more and more articles out there in the financial world about, expecting basically a flat market for years to come. And I will add in my take on that is it's going to be flat on the overall, but you're going to see volatility within those years. So like this year, the general consensus is where the S&P is now is about was how to put this, where it is now is actually where they were forecasting it will be at the end of the year. Well, most people are like, well, it's just going to go up from here. Well, it can just chop sideways from here too. So I'm not saying it's going to go up. I'm not saying it's going to go down, but we're going to see a lot of chop and a lot of volatility. I mean, if January 1st, you would have bought an S&P 500 fund and not watched any news, not paid any attention between now and today, you'd turn your computer back on and be like, wow, I'm up 6%, 5%. That's pretty darn good for just over halfway through the year. The problem is, as humans, we live through all of it, including the 20% drawdown, right? So, patience is going to be key, I think, during this next 4 or 5 years. And it's going to be a lot of grind and, a lot of volatility, societal, markets, employment out there for folks. It's going to be a lot. And, compared to previous difficult times, late 60s, early 70s, even, social media is going to change a lot of the perception of how bad things are and how good things are and the back and forth of it.
Yeah, I think you're right on all your points. Now throw into that 2 nuclear subs off the coast of Russia.
That's probably nothing. Yeah, probably nothing.
China, AI, and all the predictions of what has happened, because I'm thinking of the book you encouraged me to read, and I did read, The Storm Before the Calm. And there are some significant things that don't really have historical precedent when we try to calculate forward to, okay, we should be coming out of it by 2032. Woohoo! Really? I don't know. I hope so. I certainly do.
Well, and do bear in mind though that book's just talking about the 2 cycles that it studies.
That's what I'm saying.
If China throws a curveball in there, all bets
the impact
off.
of technology is something that is. Is there any precedent for AI? It's not the Gutenberg press, brother. This is something different.
Oh yeah, absolutely. Yep, it is, and it's easy to throw around. It's a game changer, right? Well, this one is. AI is a game changer. Start using it, guys, because it is an incredible tool. And try not to use it like old people, like I was. It's not Google. Throw nuance in there. Don't say, where's the nearest good restaurant? Put nuance. Write a paragraph about what you're looking for a restaurant. And it'll find it for you. If that exists within, whatever radius that you put in there, within 50 miles or what have you. It is an incredible tool.
If that you just said something I don't know that was important. I don't know if people caught it, and that is the prompts that you ask it really determine a lot of the information you can get out of it. So understanding how to make good prompts is a whole thing in and of itself when you're dealing with AI.
And I just have the free account for ChatGPT. It will remember your previous searches and I'll say bend the answers towards what you've shown interest in the past. So of course there's a downside to that because you may not get, I'm trying to say, you may not get, it may bend the answer to what it thinks you want to hear. I don't know if that's how it works or not. So, be aware of that as well. There may be some, I don't know, I guess I'll say manipulation in there for lack of a better word. So, buyer beware as always.
And I do pay
for the incredible tool.
I pay for the premium Chat GPT, and I was asking it something we were preparing for. I think Dr. Phil and I were doing an Epstein show a few weeks back, and it kept giving me the wrong date for Epstein's death. And I could not get it to give me the right date for Epstein's death. Think about that. So is that manipulation? What is that? Everything else was right, but it was way off on that one by weeks.
Interesting.
Strange, isn't it?
It is strange.
I'm not saying it's nefarious. It's not always correct, I guess.
Yeah. Yep. Well, and it goes back to, buyer beware, right? So Fact check everything you see, including us.
Including us.
Yeah.
That's a great place to end it at.
Yeah.
And with
Right.
that, Will, anything else?
No, sir. That's it. Go out, have a great week, guys, and I'll see you next Monday. So,
Because the fight is coming.
and we will come back and join you and give you more stuff. And Rich is very generously going to take care of show prep for that one. So I will be the surprise guy that time around. I will be the cymbal banging monkey, as the saying goes. And I appreciate you doing that, brother. And with that, I'll take us out. The fight's coming. Be ready.